Hey there, welcome back to Live South Florida, your go-to source for everything about life in the Sunshine State. Whether you're thinking about moving here, leaving Florida, or investing in real estate, today's topic is one you can't afford to overlook: Florida's home insurance crisis. It's a hot topic right now, and for good reason. This crisis is impacting every homeowner and potential buyer in the state, shaking up the real estate market in a very big way. In fact, it's one of the key reasons many people are choosing to leave Florida or reconsidering their plans to move here. So let's break down how this crisis began, why it's getting worse, and what it means for you if you own or plan to buy property in Florida. Spoiler alert, it's a wild ride ahead. Let's dive in. Let's start with a staggering fact. 15 to 18% of Floridians have dropped their homeowners insurance, almost double the national average. Why? Home insurance in Florida has become incredibly expensive. To put in perspective, back in 2019, the average annual premium was around $1,800, which is about $150 a month. Fast forward to today, and now you're looking at premiums between $6,000 and $9,000 a year, or more than $500 a month. That's a shocking 400% increase in just 5 years. And it's not stopping there. This year alone, rates have jumped 42%, and with recent hurricanes, they're expected to keep rising. Even for longtime Floridians, the situation is tough. Imagine not having property insurance. What happens if a hurricane or a fire strikes or some other natural disaster damages your home? Unfortunately, many people just can't afford it anymore. As I had mentioned, around 18% of homeowners are now opting to go without insurance. What used to be rare is now the norm for many retirees and seniors who simply can't keep up with the soaring rates. This crisis is not just affecting homeowners, it's a major concern for investors too. Real estate investors are now rethinking their plans because the math just doesn't work anymore. With insurance costs as high as they are, the ability to make profitable deals has become much harder. These skyrocketing insurance rates are making it nearly impossible to invest in real estate in certain areas. We've faced these tough decisions in Texas, Florida, and other Gulf states. You simply can't make the financials work with rates this high. For people living here, it's not much better. The reality is that many homeowners are forced to go without insurance because they just can't afford it. The issue is even more complicated for those with mortgages, as they're required to have insurance. While those who own their homes outright might be able to take the risk, anyone still paying off a loan doesn't have the option to skip coverage. For real estate investors, this is a massive red flag, as rising insurance costs are having a significant impact on the market. The spike in rates have been staggering, and there's no sign of it slowing down. One major factor contributing to this is how insurance companies operate. They don't directly absorb losses from payouts. Instead, they raise premiums the following year to make up for what they've paid out. So even though rates are currently between $6,000 and $9,000, after the recent hurricanes, we can expect those numbers to climb even higher. Who's footing the bill for all of this? Whether you live in Florida or not, chances are you're paying for it. Why? Because insurance companies are spreading the financial hit from places like the Gulf, California with wildfires, Texas with freezes and hurricanes, and even Hawaii after natural disasters across the entire country. If you have a well-known insurance provider like Allstate, Geico, or State Farm, it doesn't matter where you live, they're balancing their losses nationwide. When these companies are hit hard in Florida, they offset those losses by raising premiums everywhere else. Many of these big insurance companies have pulled out of Florida entirely. This isn't just a Florida problem, it's a nationwide issue affecting everyone, but it's hitting Floridians the hardest. The question now is, what's next for the Sunshine State's real estate market? And how will residents and investors navigate this challenging landscape? So how did we end up in this mess? To understand why insurance companies are canceling policies or fleeing Florida altogether, we need to rewind to 1992 and the event that started it all.
Hurricane Andrew.
If you were around back in the early 90s, you probably remember Hurricane Andrew. This Category 5 hurricane hit South Florida with a vengeance, leaving tens of thousands of homes destroyed. It was the most expensive natural disaster in U.S. history at that time, causing billions in damage. Over 650,000 insurance claims were filed, with a total payout of $15.5 billion, or about $32 billion in today's dollars. The major insurance players, State Farm, Allstate, Travelers, and Prudential, were caught totally off guard. They responded by pulling out of Florida or canceling hundreds of thousands of policies, leaving Floridians with very few options for coverage and plunging the insurance market into chaos. But Andrew did more than just damage homes. It exposed the fact that Florida's vulnerability to hurricanes had been severely underestimated. The insurance industry quickly realized that insuring Florida homes came with enormous risks, and other coastal states also began reassessing their exposure to natural disasters. This led to some major changes in the insurance market, many of which can be traced directly back to Andrew. Hurricane deductibles became standard practice. The government stepped in to play a larger role in insuring coastal properties. The rise of reinsurance capital, insurance for insurance companies, helped to spread out the risk. Stronger building codes were enforced to better protect homes from future storms. These changes helped, but new challenges soon arose. Fast forward to today, and Florida's insurance market is more chaotic than ever. One of the biggest issues, fraud, especially related to roofing claims. Florida accounts for 9% of the nation's home insurance claims, but get this, 79% of the nation's home insurance lawsuits come from Florida. Many of these lawsuits are completely fraudulent. Here's how these scams usually work. Roofers show up in neighborhoods offering free roof inspections. They always find damage and promise homeowners they'll get a free roof by waiving the insurance deductible. Homeowners sign an assignment of benefits, an AOB, giving the contractor control over the insurance claim. The insurance company's adjuster comes out and finds less damage than the roofer claimed, or no damage at all. The roofer sues the insurance company for the full claim amount, and the insurance company is left with two bad options: fight the lawsuit and rack up legal fees, or settle out of court. These fraudulent lawsuits have spiraled out of control. In 2021 alone, Florida insurers posted $1.7 billion in losses due to legal costs. Over the last 2 years, the losses have totaled more than $2 billion. This is why so many companies are liquidating or leaving the state altogether. One significant issue in Florida's insurance crisis is the age of roofs. Insurers are wary of covering homes with older roofs due to rampant roofing scams. Florida's new laws now prohibit companies from denying coverage for roofs under 15 years old with at least 5 years of life remaining, offering some relief. However, homes with older roofs still face challenges in securing insurance. Florida's vulnerability to natural disasters doesn't stop at hurricanes. The state's geography makes it prone to severe weather, and the recent impact of Hurricane Milton highlighted this. The storm unleashed a devastating series of Midwest-style tornadoes, marking an unprecedented disaster for South Florida. 3 EF tornadoes struck St. Lucie and Palm Beach County with winds up to 155 miles per hour. The damage leveled homes, businesses, a solar power plant, an airport, and even a sheriff's office. Unfortunately, the tornadoes are also responsible for killing at least 6 people and injuring 4 others. The EF3 tornadoes marked the first time such tornadoes have appeared in South Florida under the new tornado rating scale adopted by the National Weather Service in 2007. Prior to that, EF3 rated tornadoes were recorded under the previous scale that factored in fewer variables, with the most recent forming in Broward County in 1980. The aftermath has left homeowners with a long and expensive rebuilding process, compounded by skyrocketing insurance costs and delayed claims. Florida's increasing exposure to tornadoes, hurricanes, and other disasters is straining an already fragile insurance market, pushing many companies to either raise premiums or leave the state altogether. This has made finding affordable insurance coverage more difficult for many Floridians, especially those in high-risk areas. After Hurricane Andrew, insurance companies fled Florida because it became too expensive to operate. When insurers pull out, you have fewer options, and the ones that remain jack up their prices. In response, Florida created a state-funded insurance program called Citizens Property Insurance to help people who couldn't get coverage on the private market. It worked for a while, but in 2007, the laws changed, allowing citizens to compete with private insurers. Suddenly, anyone could get coverage through Citizens, and they grew to cover a significant percentage of Florida homeowners. But here's where things get tricky. In 2022, Governor DeSantis said he wanted to shift people away from state-funded insurance. It makes sense in theory because ultimately taxpayers are the ones footing the bill. The problem, though, is that only one private insurance company stepped up to fill that gap: Slide Insurance. This company, with a pretty terrible rating, is now covering a big chunk of Florida homes. Slide gets to cherry pick which homes they'll insure. Some homes are deemed too risky, and the ones they do cover come with rates up to 20% higher than public insurance. All of this is driving up costs, and it's impacting the real estate market. The good news is that Florida lawmakers are taking action to fix the situation. In December 2022, the state Senate passed Bill 2A, introducing significant reforms aimed at stabilizing the market and slowing down premium hikes. Here's what's changing. The claim filing deadline has been shortened from 2 years to 1 year, reducing late or fraudulent claims. The deadline for insurers to pay claims has been reduced from 90 days to 60 days. The one-way attorney fee rule, which forced insurance companies to cover legal costs in lawsuits, has been repealed. Assignment of benefits, AOB agreements, which fueled many fraudulent roofing claims, are now banned. So what can you do if your insurance rates are going through the roof or your policy isn't being renewed? Here are a few options. Number 1, explore your options. Even though some companies have left Florida, others have entered the market. Shop around for new policies. Competition could help you get a better rate. Number 2, be cautious with Citizens Insurance. Citizens might seem like a good deal with lower premiums, but their coverage is often more limited, and there are concerns about their ability to pay claims in the event of a major disaster. If you have other options, explore those first. Number 3, protect your home. If you've recently replaced your roof or added storm-resistant features to your home, get a wind mitigation inspection. This could qualify you for significant discounts on your insurance premiums. Now, you might be wondering, why does this matter if I'm looking to buy or invest in Florida? The cost of insurance is increasingly impacting the real estate market. Investors are pulling out because the rising insurance costs are making deals impossible to pencil out. Even for locals, choosing where to live or invest is becoming more complicated as insurance rates skyrocket. Some people are even rethinking whether they want to live in Florida at all. And here's a not so fun fact. Insurance costs are expected to keep rising, especially after the latest storms. We're talking $8,000, $10,000, maybe even $12,000 a year. That's $1,000 a month just to insure your home. Florida's insurance crisis is a huge challenge, but steps are being taken to address it. If you're thinking about moving to Florida or investing in real estate here, home insurance needs to be a top of mind. It's a big factor that could affect not just your budget, but your ability to get coverage at all. But don't worry, there are ways to navigate these challenges, and with more reforms and new options entering the market, things should eventually improve. What do you think? Are you ready to tackle Florida's insurance crisis, or does this make you think twice about moving or investing here? Let me know in the comments. If you found this video helpful, be sure to like, subscribe, and hit that notification bell for more options from Live South Florida. Thanks for watching, and I'll see you in the next video.